Let's discuss the question number 5. In this question, we will be preparing a balance sheet. So the question says, prepare a balance sheet for this company as of December 31st, 2010. So the question gives you information about the cash, patents and copyrights, accounts payable, accounts receivable, and then tangible net fixed asset, inventory, notes payable, accumulated retained earnings, and long-term debt. So let me explain a little bit what's it. Cash means what's the cash the company has. Patents and copyrights, those are non-tangible asset because the copyrights means it's that the company has the right to make something. They have the legal right, which nobody has. So that's the patents and copyrights. So those are non-tangible or intangible assets. Accounts payable means how much the company needs to pay to other peoples or other entities. Accounts receivable means how much the company will get from other customers or other people, other companies. Tangible net fixed asset, so that means the total net fixed asset is 5 million, 100,000. So inventory is that whatever the company has in their warehouse, uh, and the notes payable means this is, you can say notes payable, it's some sorts of loan. These are loans payable, or the money payable to the other banks or other creditors, who is 189,000. Accumulated retained earnings means what's the total retained earnings. Let's say the company, this year the company made a profit of $100,000. Out of this $100,000, they paid $40,000 to the shareholders as a dividend, and they kept $60,000 with them. So this is called accumulated retained earnings. So in this example, that is $60,000. Long-term debt means if the company has any loan which will be expiring, which will take more than a month, more than a year to pay off. Let's say the company took a 10-year loan, and this is the first year. It's still 9 more years to go. So this will be the company's long-term debt. Alternatively, if the company takes a loan for, let's say, 6 months from a bank, from a financial institution, so this loan duration is less than so the company has less than a year to pay it off. So we will not call it long-term debt, rather we will call it short-term debt. So let's construct the balance sheet. So in the balance sheet, in left hand side, you will have total assets, and in the right hand side you will have total liabilities and owner's equity. Remember one rule: in the balance sheet, total asset needs to be equal to the total liabilities and equity. So that means your left hand side and right hand side are equal. So in terms of asset, these are the components of current asset. Those are given in the question, that your cash is this, accounts receivable is this, inventory is total this. So if you add them together, you get your current asset of $984,000. Now, then this is the current asset. Now we need to add other fixed asset too. So your tangible fixed asset in the question is this, and your intangible fixed asset, which is the patents and copyrights, is this $847,000. So if you add all of them together, then you get total of 6.9 million. Now we got the total asset. Now we need to construct the right hand side one. So here our accounts payable is $296,000 and notes payable is $189,000. If you add them together, these are our current liabilities, which is $485,000. Now so these are the current liabilities. Now if we add long-term liabilities, then we will get our total liabilities. So if you add long-term liabilities, which is 1.2 million, if you add them together, this one and this one, you get total liabilities of $1.7 million. So now you got total liabilities. Now what's left is the owner's equity and the retained earnings. So owner's equity is not given in the question, but retained earnings is given in the question. So you know this, but you don't know this. So how, you need to find out this one, owner's equity. So remember, if if you um, if you add them together, then if you add this one, and this one together, then you get your total liabilities and owner's equity. But this is not, again, this value is not given in the question. So how did I get the value? Answer is simple. I mentioned earlier that this one, total asset, must needs to be equal to total liabilities and owner's equity, which is 6.9 million in this case. So this value will be exactly the same as this value. That's how I got it. So now you need to find out what's the owner's equity. So we know that the owner's equity is total liability and equity minus accumulated retained earnings minus total liabilities. If you just plug those numbers in, then you get your owner's equity of $610,000. Thank you.